Good morning, afternoon, or evening, everybody. My name is Nick Groves, your host here with Trading Analytics, and today we have a lot to talk about. We're going to be recapping last week and all that went on in the equities, gold, dollar index, and some big tech. So stick around with me and let's dive in. So I'm going to start off here with the 15-minute chart of the S&P futures, the E-mini out of the CME. Last week we were relatively flatline. I think we opened up right around here, hovering plus or minus a little bit. Not much action. It was a low liquidity week. But then on Thursday, we did finally see us break this descending channel resistance. We broke out. We actually came right up to the previous all-time high and rejected. Now, if you take a look at the cash market, which I do recommend, cash is king, as they might say, we did actually make it a brand new all-time high in the cash, but we did reject, and depending on where you look, we closed flat to negative on the day. And I do find that somewhat significant because we've seen a lot of double tops, and I'll dive into that a little bit more before I walk away from this chart really quick. Some people are calling this chart a bull flag, and I'm having a hard time with it. If you stretch this out, what you don't want to see on a bull flag is the width from the pole to the top of the beginning of the flag to extend further than the flag itself, which in this case it does. But I guess you could technically draw it back from here. I don't love that look, but if you did, I think it does then, work. It does work just barely. Yeah, pretty much. But just to take a look, that target, that would take us up probably somewhere around 4,400, 4,500. So let's see. Yeah, 54. Did I say 4,500? 5,400. This market is bananas. It's been a fun one to watch. But yeah, that's something that you guys can keep on your radar if you like. I personally think it's a little too close for comfort. I don't like how stretched it is, but if you're into it, then be my guest. But getting back a little bit onto that double top discussion, um, it's too close to be calling this a double top first off, but if it does hold, it might be joining some other areas of the market that's also printing that. If you take a look at the Dow Jones Industrial Average, DJI, the cash contract, we're seeing somewhat of a double top there. If you take a look at XLY, XLY is also putting in some form of a double top. NASDAQ, where are we on my NASDAQ chart? 1 second here. There we are. It's also putting in some form of a double top. So, and I think the triple Qs are pretty darn close as well. Yep. So if the S&P decides to follow the tech market, which tech led us up here, tech's likely to lead us down, you could see that hold. The nice thing about double tops is if it comes up and bangs its head a third time, we know that it's probably going to break higher I've been calling infinity and beyond above 5,300. But for now, we're still in this channel. It's still bullish. And you could see it rally all the way up to above 5,300 plus potentially, which is where you're going to start getting into a little bit of the blow off top conversation. I'm not there yet until we get above there. But just something to be aware of. For me, right now, 5190 is going to be support. And until we get back below 5100, I'm not ready to get too bearish. If you feel like shorting the market, keep your size light. You can put out a feeler, but you know your risk. It's this high right now, but if not, the top of this channel up at 5300. But just be careful because if we do end up in some form of a blow-off environment, you really don't want to be stuck short because you could see a 3% move in one day. If it's going to blow off, let it occur. Have the close negative after a massive spike, and then let's start coming up with ways to get in, right? But yeah, so moving on, I wanted to show you guys XLE. I've been talking quite a bit about that lately. It is a defensive asset that you can be buying, and it has broken out and closed above this resistance. Now technically you could draw it here at this spike high, and when you're looking at such a larger chart, this is a daily, You have to be able to give it a little bit of wiggle room. But essentially, it's back up here. It's banged its head 3 times. It looks like it could break out, and it's close to levels we haven't seen since 2014. So keep your eye out on resistance here at 95. And in the event that it continues to break, if it pops up, say close to 100 and comes down to back test, we're either going to get a resumption of trend, which is a confirmed breakout, or we're going to be getting a false breakout that would potentially lead to a breakdown. So that's something to be aware of. That's been on my radar. And I've also been taking a look at IWM. IWM to me, what we saw on, I believe, was it Thursday? Let me just double check here. Or earlier in the week, Wednesday or so, when we were selling off a bit. Yeah, when we were selling off on Wednesday, we saw IWM really perform quite well respectively to everything else. But if you take a look at this 8-hour chart, this spike here in November of 2021 to the lows that we made in October of 2023, although we're peaking at highs that we've been at as of late, kind of really since December, just in this range, popping a bit above it. But the 618 is just above here at 213. So 212.94, 213. So make sure to pay attention to that level. If you see the breakdown in equities, like let's say some of those double tops hold and IWM spikes up there, it could be a good opportunity to get short. If you feel like being short IWM, that's the level that I'd be looking for. But I would not be surprised to see stops kind of gravitate towards this level. But to contradict that, we might not get there because on the daily chart, we did actually post a shooting star here, which is a reversal candle. So do note that. Some other things that I've been looking at, and it's end of month, end of quarter. We've been seeing some interesting developments. I mean, especially in contracts like gold, closing at an all-time high. What a run it's been on. When I was looking at gold, I'm thinking, we haven't seen breakouts in gold like this in quite some time. I mean, we've been capped by the 2000-ish level for the last 4 years, and now we're going. So what's going on, and how could that affect equities, right? And I'm always looking at some types of ratios here and there. I like to look at, the S&P to gold ratio. And, obviously when the S&P is performing worse than gold, this ratio is going to be falling down and vice versa. And what I like to do is sometimes I'll overlay it with what's actually going on in equities right now. And you can see historically, even if let's see if I can try and get a good look here. You can see that they tend to track very well together, up and down, up and down. But right now what we're seeing is we've been moving the last 5 weeks. We've been moving, down 5.9%. I'm going to get rid of this. It's ugly. Down 5.9%, but this line in equities, this is the S&P in orange here, it's not. So I'm starting to wonder, are we going to see this correlation reunite? Could we see a pullback in equities? Certainly if you were trading based off this chart, you would suggest it. And another chart that's another ratio-esque chart that I've been looking at too is NASDAQ versus S&P ratio. Since I believe that, the 2021 bull run was led by tech, I think in the event we do decide to roll over at some point, who knows when, tech's going to be a main driver in that, the big Mag 7s, which we're going to dive into here shortly. I've been noticing that sometimes, I don't know what that was, sometimes when we see a breakdown in the S&P, we can see it being led in this ratio a little bit early. So just to look back to November of 2021, we saw this ratio decline for about a month before we saw a sell-off in the S&P. Similar here, we started declining for about a month in August of 2022 before we saw a decline in the S&P. And right now, we're seeing a decline for the last month and a half in this ratio without the S&P. So will that correlation reunite? That's something I'm going to be paying attention to. And if you're looking to figure out when it starts acting, you can check out our Twitter here, Trading Analytics. and it's just at Trading Analytics. I'll be posting updates on there for all of you to take a look. And like I mentioned, we're end of month, end of quarter. We're looking at some of these bigger charts and bigger outlooks of what's been changing. TLT, it was negative on the quarter, but I also noticed that it did hold the lows from February, and it's pressing up against this descending channel resistance. And I think I have it hidden, but the 200 EMA actually, 200-day EMA, exponential moving average, is sitting right at, I got to get rid of this S&P. Is sitting right at 95.60. So in the event that you see TLT break above 95, resistance right here, channel resistance, and I'd like to see it above the 200-day at 95.60. If you can get a daily close above there, I think that it's likely that we see TLT rally over the coming weeks. Now, granted, it just tagged down a downward resistance. It's still making lower highs. So right now it's in a bearish descending channel. So you have to respect that. So just keep your eye out on that and give it some wiggle room up here on a breakout. Like I said, this is a longer dated chart. It dates back to December. So just give it some wiggle room. And another thing to give some wiggle room on is the DAX. The DAX has been so interesting to me. Mainly because it's been rallying on some, how do I say it, crap data out of Germany. But we just came out, this chart's been holding since, this ascending channel's been holding since September of 2022. We finally came up and tagged this resistance line. 18,500 is a massive level in the DAX. And just how it can take weeks for these levels to get respected, it can take weeks for it to turn. So I'm not calling for a top in the DAX, but I am going to take just look at RSI, how crazy high this reading is on an 8-hour chart. The daily chart's the highest level since, and I'm just now noticing this. Well, I can't even go far back, but it's the highest since before 2013. We know that. Extreme reading. So, that just keep your eye on that 18.5 level. On any pullback, I imagine support would find somewhere at the 38.2. This would be massive support for me, that around 17,000. I don't trade the DAX all that much, but that would just be my first guess if I were to be trading it. You might also see some support of this. Let's see here. Sorry. This dates back to April of 2015. We saw it actually break above here before, so support could also be found around 17,700, probably by the time we get there. So do note that it's been an interesting environment the last week, hitting these levels, being near all-time highs, especially with the VIX relatively grounded. We saw it break down of this channel that had been sitting in, which was getting exciting there for a bit, but all parties come to an end. And now we're sitting back below 13. I do see it sitting in somewhat of this triangle. I'm watching for a break above 13.15 to hopefully get some more action. That's what we're wishing for. We might get it next week because we do have some ISM data, some manufacturing data, and we have the NFP. It's going to be a big one next week, mainly because, last week when Fed Powell was talking, and by the way, we do have some Fed speakers this week, he said that jobs rolling over could be a driver for rate cuts. And I also imagine with the unemployment next week as well, we could see that tick higher. Granted, I don't feel as if the first week printed NFP and the first couple times unemployment rises, we are at a 40-year low, that it's going to change their mind all of a sudden. But just start paying attention to that. I know I mentioned gold in that ratio, but just to take another quick look for you guys, we saw that massive spike the other week, and I thought, that's interesting. But when you see a crazy spike like that, similarly to if you see a crazy spike in like the Asian session overnight in equities, sometimes price likes to gravitate back towards that level, and we did. We broke above the 127% extension. The next is going to be the 161% extension at 22.45, which I imagine if we get up there, somewhere around there, we could see a pullback, and I don't think the pullback is going to take us lower than 21.45. If anything, I'd imagine 21.80 or so would find support. But if we do go below there, this massive breakout level here is definitely it. And some have been viewing gold as a cup and handle. Just so you guys are aware, that does target up above 20, up towards 25.45. Crazy markets we're in. And speaking of the craziness, what's been driving it? Probably big tech. So I know everybody's been hyper focused on NVIDIA. To me, it was a bit of a snoozer the last few weeks. We rallied up here in early March, and then we fell right into this range that capped us for majority of the month. We broke out, but we failed to get above the previous high, and we're now back in this range. And in my opinion, I think we're more likely to test the lower end of the range first at 852 before we break the highs. Maybe I'll make a little poll on Twitter, and I'd love to hear some of your comments on that. But in the event we break below 852, I think it's likely that we come down to this to fill this gap at 822. And we also have a 50% retracement from this low to the high. So that's going to be a big level for me. I imagine that buyers step in somewhere around there, just because this is such a bullish stock. AI does not seem to be going away, and at least the AI, do I dare say, bubble isn't over yet. So just be aware of that. But above there, I feel as if we're going to be going to likely above 1,000. I think we blow above 1,000, and I think we stretch up to 1056 if we get above highs. So that's my personal opinion, and I'm entitled to it. So just joking. But let's dive into some other areas of this big tech market. One of the charts that I've really been looking at this weekend is Meta, and I found Meta interesting because throughout the week, and I didn't really have too much time to sit and think on it, but I was reading about Zuckerberg, Mark Zuckerberg, if you're not familiar with him, the CEO and chairman of Meta. He sold over 39 million shares worth of Meta this week, and he was doing it around 505 to 509. Maybe he had some goal of one day when it gets to 500 to sell it there. I have no idea, but it's a little unsettling to see some of that. And I was like, well, who else is maybe selling that's within Meta? Well, of course, I saw that the chief legal officer, Jennifer Newstead, sold 585 shares of the company. And that's to add to the 32,245 shares that she's already sold this year. So they're dumping some off here. Is it time for a pullback? I'm going to let you decide that. But we did have a false breakout of this ascending channel, and now we're breaking down and closed below this ascending channel support. So take it to the 1 hour chart. If we get back below this support here at 875, which had some spike lows, I think it holds, some spikes above here, just a little bit of horizontal support there. If we get below there, I think we're going to be back down at 455. Now you might see a little bit of a bounce, but if we break 455, and I think you should have your alerts here, we go straight into a massive gap that is held since the beginning of February. That gap is a 10% gap. So gaps typically get filled, and I think you could have a nice little trade there. I would probably take the short at 455, put my stop somewhere around 468 or so, and try and target the lows at 405. That's just an idea, but that's not financial advice. Moving along. Oh, one last thing about Facebook before I walk away from here. I also noticed, if you take a look at this much longer dated chart, it dates back to July of 2017. It starts here. We had a tag here in August of 2021, and we just did a little bit of a throw over of it this past month, and we tagged it again on the week of March 18th, and it's now rejected. So that's massive multi-year resistance. That's another little sprinkle on top of the cupcake for you. Yeah, so I've been monitoring this. I haven't been giving it the attention it deserves, and now it's on my radar. So be checking Twitter for any updates on that. Microsoft. Microsoft completed a bull pennant, in my opinion. We've been looking at this on the daily roundup here with Forex Analytix. We've been talking about it quite a bit. I think it's completed now because close enough for comfort for me, and that's just how I'm viewing it. But now we're in a bit of this wedge. Now wedge support comes in around 412. Microsoft has been performing extremely well. If I was a fund manager, Microsoft would be one of the companies that I'd be, just looking to continue to hold. It's been holding up exceptionally well. It hasn't been in the news like, some of that Facebook news or news on Apple, which I'm going to be touching on here in a minute. But it is now in this rising wedge, which typically can lead to a breakdown. So just monitor it. I'm more bullish on Microsoft than I am the other companies, to put it that way. And taking a look here at Amazon. Amazon, similar thing, rising wedge. We have support here at 178, resistance at 183. It's also been performing extremely well after it broke out of this massive ascending channel that held pretty much since December of 2022. We broke out in 2024. So in the event this wedge breaks down, you might see a back test of this former resistance, now support. And let me just see out of curiosity, like if that's some type of fib. Yeah, somewhat. Could get there. No, I don't like it. Disregard. I was just curious there. But now, moving on from Amazon, I would like to talk about Apple. Now, Apple has just been taking a beating this year. It's second to Tesla in terms of the worst performing of the Mag 7. It's now sitting in this descending channel. It's been respecting it. Support on it, by the time we got down there, is probably somewhere around this 50% retracement at 161. You might be asking yourself, why is it so weak? There's been a lot of talk about, the weak China data, but the issue going on with Apple and the China, I think it's more of a China's having a problem with China trying to kick back. You're seeing kickbacks on TikTok from the U.S. and China trying to get into more of their own country's businesses being, glamorized. So Apple's taking a little bit of a hit there, but Tim Cook was over there this past week to try and make sure that they're doing a good job of maintaining the middle class of China's interests. But on top of that, the Justice Department, the U.S. Justice Department, is filing a lawsuit against Apple for monopolizing the smartphone markets. So, it's not looking good. And also, this is a daily chart, and we're seeing another bit of a double top, do I dare say it, and a trigger of there would actually take us down closer to the 786 of this entire move for 2023 to 2024. As you guys know, the 38.2% retracement is a continuation fib, so we're really at some critical support, and we've been hovering around it. And being on a daily or a weekly chart, you want to give it time to really come to fruition, but it's banged its head so many times, it just looks to me as if it's likely to break. And I'm still bearish Apple. If you see some of these other stocks like Microsoft, Facebook, Amazon, some of those wedges break, where does that put Apple? I'm just a little bit hesitant, though sometimes it can pay to be optimistic when others are pessimistic. I don't want to touch Apple. That's just where I'm at. So if that double top triggers, if we get below the 38.2, it looks extra bearish to me. So I'm just a little bit hesitant there. And last but not least, I'd like to talk about Tesla. We spoke last week about this inverted head and shoulder pattern. We broke out of it. It had a nice pop. It did not fully complete. We are retesting the neckline, and just to show you guys where it would complete, it would be somewhere around 190. And I was looking at it, I thought, I don't know if we're quite going to get there. Tesla's down over 30% on the year. I'm not overly excited. So how else could we view it? So let's get rid of this really quick and just take a look. Tesla could be in some form of a bearish wedge. I need to get rid of a few things now. It could be in some form of a bearish wedge that would actually target us closer down towards 150. That's starting to look like the more likely scenario for me, especially because if I go back just a little bit and give me back some of my chart, it did actually have a bear pennant trigger, and that bear pennant trigger does target much lower, down towards 111, 112. So I'm ultimately bearish Tesla. That inverted head and shoulder looked nice for a pop. Maybe those folks got paid who played it, but it might be over with. So just be cognizant and make sure to watch that level that we've been talking about on this neckline here. This really needs to hold. If it gets back below 175, this pattern is now invalidated. Then your support comes down to 171, and then if that breaks, be looking at that bearish wedge. So, and with that, I hope you guys got something out of this. I always like walking through the charts with you, and it's Easter weekend, so I hope you enjoy your time with your families. I appreciate you taking some time to watch this. Please like, subscribe, and share this. I really would appreciate it. And everyone, enjoy your holiday. Thanks so much.